Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar displays another round of choppy price action. As you can see here, the market's fallen further away from the 74-cent handle and now pressures the downside with the objective holding at 72.80, which was nearly reached, or more or less, with 73 cents being the intraday low on Wednesday. With the technicals declining and also with the MACD nearly confirming the negative signal to the RSI and marry up, then further risk is towards that support level. If the market does manage to take out the level of 72.80, the next view is to 72.30, 35, where I believe we could see slight retaliation from the bulls, as we did see back here in the end of August. Nevertheless, the prices are weighing very heavily due to the recent slightly more dovish tone from the RBA Governor Phil Lowe yesterday. Still, the resistance, I believe, will cap at the intraday at 73.55. A choppy round for the US dollar, which measures the greenback strength against a basket of 6 major currencies, and also for the euro. After rejecting that topside challenge, the market has resumed itself back to a slightly bearish case and still looking down towards the support region of 117.60, but to get further, that is, towards that downside objective of around 116.75 to 116.15, we need to see the dollar index close above 92.85. It did spike a high recently at 92.88 as it now trades at 92.60. So there's still a bit of work to do to support a stronger bear case for the euro. But for now, the market is heading towards that challenge of 117.60 and reassess. What triggered most of the volatile moves overnight was the market waited for the CPI number. Now on Tuesday, the US Labor Department released the Consumer Price Index, which showed a smaller than expected rise in US inflation for August and an increase by 0.3% for July, the smallest advance in 7 months, missing the 0.4 forecast. The rise is slower than the 0.5 monthly increase in July and down markedly from June's 0.9. Taking out food and energy, the core consumer price index was up just 0.1% for the month. Investors now wait for next week when the US Federal Reserve's officials kick off its two-day meeting on the 21st, 22nd and see what comes out of the statement. Dollar yen clearly rejects that level around that 110 after briefly touching there yesterday and now looks very much for the challenge of 109.25 and even lower towards the region of 108.70-75, which may find a bit of a bullish rebound from this area. Overall, though, technically we are holding to a negative bias, so I believe it should be a continuation from this negative candle. Sterling very whippy and briefly stabs at 138.80 level but rejects and now looks closely to that 137.80 support. I believe the market could actually stretch down towards where I've highlighted here at 137.30 and then reassess. That means sterling yen, after the challenge at 152.40 was rejected and clearly from the bearish outside range day, will continue to hold that negative bias if we see a close under 150.90. This would see a further slide in price and down towards the region of 150.40 and reassess from there. A little bit whippy for gold after staging a rebound from its 4-day consolidation. Nevertheless, the pattern has strengthened up slightly, so no doubt the market will need to confirm this candle, which is an bullish or an engulfing outside range engulfing candle or bullish outside range day. That is, if we see a close above 1,814, then we're heading back up towards that top side of 1,830.35. But I feel with the technicals being relatively on the weaker side, we may see that 1,814 rejected and look back towards the bottom side of the range of 1,770. We can still see that oil is trekking towards that topside target around $72 a barrel and no doubt may find a rejection from there as it was heavily supplied when we recently got near that level If so, then we still should not rule out eventually a test back to that 67.5 with the recent hurricane causing havoc. That is Hurricane Ida, and furthermore, we've got also Hurricane Nicholas, and therefore the market has found that it's slightly got itself caught short. I feel this will eventually wane out towards this level and then drop. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the great start of the day.